Hey everyone, welcome back to the Serpent's Den where we talk everything Illuvium and ILV. Alright, let's run the intro. Okay, guys, I made a post earlier today if anyone wanted to see my thoughts on the ILV price action. And I'm going to put that all forward to you guys today in as simpler terms as I can. I'm not really going to do a deep dive on technical analysis. And I'm not really going to tell you what you should do, just kind of give you my thoughts and opinions today. And as we all know, I'm not a financial advisor, and this is not financial advice. And if you want to help more people learn about everything Illuvium has to offer, just please like, subscribe, and leave a comment down below, and that will help everyone try and get on board a bit faster, and let's get all those players into Illuvium. All right, so we're going to just jump straight into it. I have a few charts to show you, and I've actually asked for some help on this one. There was suggested on my previous thing to collaborate with other technical analysis people, and I have two groups in particular that I like to look to for all of my technical analysis needs. Okay, currently it should be stated that Bitcoin and Ethereum obviously control the markets. If you haven't been in crypto long, I'm trying to cater this to you as well. Just know that Bitcoin and Ethereum control everything. So really, anything I say about ILV is a little bit hearsay if Ethereum and Bitcoin do not behave. And currently the markets are really volatile and all over the place. So if you're currently scared about investing, if you think now might be a good or a bad time to buy, there's really no answer right now with all of this O virus and all that sort of stuff. My suggestion overall is always going to be to DCA in. If you have $1,000 to spend over 10 weeks, $100 each week. And try and spread it out as far as you possibly can. Personally, and this is personal opinion on this one, I really do think if the bull run's going to kick back in, halfway to the end of January is when we might resume. To spread out your buys over the next 2 months or 1.5 months. All right. There's no need to try and spread it out over 2 or 3 weeks. The further you spread it out over, the better. If it's a year, then so be it. Take your allocation, spread it out weekly. Personally, I like bi-weekly or even fortnightly is fine too, whatever works for you. But that's how I suggest approaching these markets, especially in December and January. All right, so let's have a look at this chart. I've drawn some really standard trend lines. This one's interacting with the previous all-time high, and it goes down and it seems to touch our current point at the moment. Okay, we were having a bit of a bullish divergence down on the TSV. Now what the TSV is time segmented volume. All that means is that it splits up the volume based on time periods and then uses that to try and chart out like a wave trend sort of a thing with that volume. So it just shows kind of the trends of volume. And I like to use this sometimes with and sometimes without the RSI. And it just kind of shows me the volume strength. And a lot of people like to ignore volume. And as you can see, we have so much volume in this area here. And then what the TSV showed us basically was that the volume didn't decrease proportionally. And it created a giant bearish divergence, which I talked about in the last one of my price update videos. And then the price came down quite significantly. But it needed to cool off before we can move upwards again. I'll show you that a bit more later. So as you can see, we were printing a bullish divergence, a triple bullish divergence, but it looks like this second one on the 4-hour isn't going to print it how we want. So it was pretty bullish, but now worth considering to just wait a bit and see if we can get some confirmation there. Looking on the daily, we actually have a giant hidden bullish divergence. Personally, I don't really trade hidden bullish divergences a lot. I prefer regular divergences, but hidden ones are quite powerful. A lot of people like them. I just generally require more confirmation. So what I would like to see on the daily is that we come down and we create the divergence. The price might come back up. Never done the drawing thing. Hard. The price might come back up, right? And then we dip lower to here. okay? And then what I want to see is I want to see this divergence. Then I want to come up and I want to see a regular divergence down on the bottom of the chart. Okay, and what that would mean is that we have a lot of strength here. We get a hidden bullish divergence and then a bullish divergence as our confirmation. I would definitely start buying heaps more at that point. Okay, so definitely don't think it's going up just yet. I think we could go sideways, and that's what I'm looking for at the moment. Now, another thing, so I was talking to the Market Makers Discord, and I'll definitely include their link down in the description below. Highly recommend their videos. They have a really good non-biased view to the markets. And I'll use some other Discords as well in the future when I do these. But definitely worth, they like to pattern trade, okay? And I've been following them for quite some time, and their trades are really interesting, and they've got this unique perspective on everything. Brendan, he's the leader of that, and he is the founder, and he has been pattern trading for over 20 years. I definitely trust his analysis and market structure, and he believes in quite a few moving averages. So I'm going to show you this. He showed me that on the ILV USD pair, there is a 3 drives pattern. Now this is relatively bullish, but how you would find the target for this is you would take the Fibonacci retracement tool and you would go from the B point, which I think was this one, well, that point anyways, and your target would sit around 1600. I'm not convinced it would reach all the way out there. The most commonly retraced to Fibonacci thing, as Brendan likes to say, is the 1276. It would be 1276 at the 0.618. So you could see the price move up about 15%. But I feel like that would be very short-lived and short-term, and the other things I was talking about would more likely play out. So that's just that one there. Now, the more important chart I want to look at is the ILV Ethereum pair. If you thought we had a big dip before, in comparison to this, we actually are looking really healthy. Now, the first thing I noticed on this chart, now this is on the daily, the first thing I noticed is that every single time ILV has made an all-time high, since about mid-August, it likes to retrace and then break up and then retrace straight back to that all-time high. So what the ILV Ethereum pair is it's the price in relation to another. So in this case, it's about, let's say, 0.3. That'd mean if Ethereum was 3,300 or 3,000, then ILV would be close to 1,000, okay, in USD value. So that's all of this is. It's worth keeping in mind that if you're more interested in USD value above all else, this could pump, but what could happen is Ethereum is just going down more than ILV is going down. Therefore, in the pairing, ILV is increasing against Ethereum, even though they're both going down. So I would take this as a token strength and a token strength in the overall market rather than in its USD strength, okay? Worth keeping that in mind, but I think these charts are usually really, really interesting to look at. And you definitely, when you're in the crypto space, especially with some of the smaller tokens, you don't want to ignore this. Especially when a token is first launched, its highest volume pair is often whatever its Sushiswap or Uniswap pair is, which is often with Ethereum or BNB. Okay, so you always want to check out that chart, especially for those smaller caps. So if we look at this, another thing I notice is that whenever we do retrace, so if we go up, what are they doing last? So if we, no, that's not it. So if you go up to the new all-time high, the previous swing low, you'll notice that when it swings back down, I'll just zoom in here for you. When it swings back down, you notice it touching the 618 and the 0.5 fib and hovering in between these three bands, 618 to 382. And it has done that pretty much every time. So if I grab the Fibonacci tool again and I bring it down to this previous swing low down here, you'll notice it again came down at the 618 and the 0.5. Now if I do it one more time for our recent swing high, okay, we're just touching the 382 now. And honestly, we're breaking a little bit below it. So again, be a bit careful. I personally like how it's touching the previous all-time high now. And it might see a bit of resistance and bounce a little bit. But I'm really not sure where it's going to go at this stage. I'd like to think it's going to go up. But here's another thing Brendan showed me. Okay. On this pairing, on the 8-hour chart, you've got something, a pattern called a white swan. Now, these harmonic patterns, I'm not going to go into them today. If you guys want to learn more about them, please leave a comment down below and I'll see if I can cover them off. They're quite complex, but I definitely suggest checking his channel out if you want to learn more. This pattern is quite powerful and it currently lines up perfectly with the 200 moving average on the 8-hour, which is really powerful confluence. Okay. Now this isn't the USD pair, so it might be hard for us to kind of gauge where it's going in USD value, but I'll definitely keep an eye on this chart and you guys should too. And I'll make a Twitter post about it, a YouTube post, whatever, if I see this starting to come to fruition. Okay. But what this means is that it goes down to this. If it goes down to this, it would hit the point pattern reversal zone for the pattern, and it would hit the 200 moving average and might skyrocket. But I'll tell you the actual target for this. So the technical target, so we're going to go from the high down to X, I think usually. A to X. I'm not sure exactly, but I'm going to go from C to B. Okay. In this case, that could be a little bit off, but I'll show you what I mean. So if I go C to B, the technical target for a lot of these harmonic patterns is usually the 1.618 Fibonacci. In this case, that'd be worth about half an Ethereum. If Ethereum is 4K, then a 2K ILV, so not actually that big of a jump. But if Ethereum's like 5K, then 2.5K ILV. A 2x, about a 2x from where it is now. So definitely worth looking out for. All right, that's it for this one, guys. I hope you guys really learned something interesting and followed closely of my little chart analysis there. I know a lot of you guys are new to crypto and to the space. I really do recommend just dollar cost averaging as you go and just putting in a little bit each week. That is the safest and best way to invest. And as I've said in previous videos, Illuvium is here for the long term. And that is kind of where your mindset really should be. It doesn't even have a futures pair. If you want to do trading, I suggest other pairings, other futures things. If you want a more long-term portfolio investment, I'm a big fan of Illuvium, as you guys know. All right. Thanks for sticking with me throughout this one, guys. Have a good evening.